What's up guys, welcome back to Trade Breakdown Saturday, where I will break down a trade that I took this week, and this week it's AUD NZD long setup. So the trade didn't yet play it out, it's still running, but I still think it's a very good trade. So I'm Oscar Madsen, I'm a funded trader as well as a trading coach, and in this series I break down my trades that I take so you guys can see what A+ setups are and can learn from that as well. So let's hop in the chart and let's see what we can do. So actually, before we go into the charts, we will write down our checklist because, as you might know, we at the Trading Academy, we trade a technical and a mechanical entry model. So we have a whole checklist. If it's checked out, then we know that it's an A+ setup, and that way we have a consistent win rate as well as losing streaks, and we can build off that. So our first thing is structure. Our second thing is premium versus discount. Our third point is supply and demand. Our fourth point is liquidity. Our fifth point is order flow. And our sixth point, which is not really a point, but it's really important, it is strong highs and lows. So what we're going to do, we're going to check them all off, see if everything is in line with the trade, and then we know that it's an A+ setup. So let's hop in the chart and let's take a look at our structure first, and then we can see if we have that as well. Okay, so as you might know, we go from higher time frame to lower time frame. So let's start with the weekly time frame first, and let's look at our structure. So our weekly time frame is really big, and this happened a long time ago, and we had a weekly structure that was bullish. Okay, so for the rest, we didn't trade up higher, we were just consolidating, but we know that we are bullish, so maybe in the near future or maybe later we can eventually trade up higher. But because we are consolidating, we could trade whatever, up, down, doesn't matter, because we are in a consolidative phase. So now that we know that, we go over to the daily and we will take a look at our structure. So I always like to take the bigger structure, the biggest one there is, so I know when I go down a time frame what really is a swing. So over here we were bullish, and then once we swept this high, we then also turned bullish again. So we were actually continuating up. After we broke structure over here at this high, we traded down lower, and from there we often know that we could trade up higher again to make a new swing high. So what the deal is now is I'm looking for longs, of course, to the daily high. Going over to the 4 hour to see what our swing is. Well, over here we can see that my swing is actually bearish over here. So why don't I calculate this? Well, that's because Trump's news. So he announced a lot of tariffs, which caused huge drops in the market, and in my opinion, or not only drops, also impulses. And in my opinion, I don't count this as any real valid structure. You could see it as structure, but in my opinion, it is not, because you often see that after those big impulses, when everything is getting calmer again, we just swipe those out. So this is just my swing. And what do we know? Well, after breaking structure, we could still see upside. Okay, so this is my structure. I only go over to the 4 hour. 1 hour structure is not valid in my opinion. It changes too quickly. So when I want to take a trade, it doesn't really matter if you're bullish or bearish on the 1 hour. So that was the structure. Let's now look at premium versus discount. Okay, so now that we did structure and we checked it out because we are bullish and we want to look for a long, and then we have premium versus discount, and this helps us decide if a pullback has already been made and if we can trade to our swing high. So let's take a look at premium versus discount and let's see if we can trade up higher already. So on the weekly time frame, because we are consolidating, as you can see, I'm not going to use a premium versus discount because I don't really expect to push all the way up higher, because the same could happen down lower, right? Because we are consolidating, we don't have any probabilities of going higher or lower. Because why do we use structure? Well, to see if there is high probability that we go long if we have bullish structure, and if we are bearish, then there is a higher probability of going short. But because we are just consolidating. There is no decision here. We can trade up higher or lower in the near future. So I don't use premium versus discount in this specific case. So going over to the daily, I use premium versus discount, and the reason for this is because we turned bullish here. We then got a pullback, and we traded up higher and broke the swing high again. So after we broke that swing high, we got a pullback down lower. And why did we use a premium versus discount tool? Well, to check from the swing low in towards the swing high. And this is to check if the pullback already has been made and if we could trade up higher to this swing high. Okay, so we broke structure over here. We are bullish, so we want to look for longs. And then once we tap in towards those discount prices, right, so we tapped it over here, then we could start looking for longs again to make a new swing high. So on the daily, definitely we hit discount prices, so we could now make a new swing high, which is up. So that's great. Going to the 4 hour, well, we are bearish, so that's not the best thing to have when we want to trade a long setup. But let's take a look at the premium versus discount tool. So we take our PVD from the swing high again in towards the swing low. And then what can we see? Well, that we still, of course, from this low, need to make a pullback to the premium prices. Okay, so we still could trade up higher. Now from here, we could trade down lower, but I will explain that further why I still think we could trade up over here. So yeah, that's premium versus discount. I'm now going to check it off of the checklist and explain the next thing in our checklist. Okay, so now that we did premium versus discount, now we can take a look at supply and demand and see if it can help us further to take our long setup. So what we often see is supply is used to trade down lower and demand over here is used to trade up higher. So what we're now looking for are demand zones over here to push price up higher, and we also look at supply zones, and the reason for this is to see where we could trade to. So let's see it like this, right? Let's say we have a demand zone over here and we bounce in it, so we're expecting it to push price back up higher. But if we have a supply over here, we don't want our TP to be above, so TPs take profit, so we do not want that to be above the supply zone. Why? Because from the supply we could trade down lower. So for that reason, we want our take profit underneath that supply, and that's why we also draw down supply as well. So I don't know if it's really visible, but I will show it on the chart as well. And yeah, let's head into the charts. Okay, so on the weekly time frame, we see that we are bullish and that we were consolidating, right? So we could head up and down. But let's see at supply and demand. So what I can see is that at the most recent price action, we tapped this demand zone. So what is a demand zone? It's a sell before the buy. And that's what clearly happened over here. So this demand zone could push price back up higher. And then what I explained on the checklist is that where could we trade towards? Well, to supply, which is going to be this supply zone. So keep in mind this supply when we go over to the lower time frame, because that's a point where we could trade towards. Okay, so going over to the daily now. Well, again, yes, we are bullish, right? Boom, so we could trade up higher. So we gotta look at demand zones. So again, it's the same demand over here that could push price up higher, and this sometimes happen. Weekly demand could be the same as daily demand, which is totally okay. So after tapping this demand, we know that we could trade up higher. Now what do we see? Well, we again see that open supply over here where we could eventually trade towards. So then going over to the 4 hour, we are again looking at demand. So all the way over here, what do we see? We still have the same sell before the buy. So it's completely okay here to have the same demand zone on a weekly, daily, and 4 hour time frame. But what do we also see is that we had this sell over here coming in towards that demand, and then we broke up higher. What did this cause? Well, to break this high and from there we created a new demand zone. So that's again demand that could push price up higher, and to where? Well, of course, to that daily and weekly supply which we spotted over here, right? So let's draw it perfect. Boom, like this. And that's a point where we want to trade towards, okay? So now that we've done supply and demand, now we can take a look at our next thing, which is liquidity. So see you guys there. So actually, let's remove it a little bit here so I have some space to make some new drawings. But basically, we now checked off structure, premium versus discount, and supply and demand. So let's now take a look at liquidity. So liquidity are basically price actions or lows or highs inside our chart, and there are stop losses below or above those highs. Well, those stop losses, they act as liquidity. So once you trade under a low or above a high, we take out liquidity. So let's say let's start here because I think that's visible. So let's say we trade up, down, right? Where is liquidity in this chart? Above these highs. So if we take that high, we take liquidity, and then we could trade down lower again. Or if it's not enough liquidity, we trade up higher, we take even more liquidity, and that could push prices back down lower. So that's what we're going to look for in order to fuel or move back up higher. So what will we need to see? Well, to take liquidity at the lows in order to push price up higher. So let's take a look at that in the charts. So on the weekly time frame here, what do we see? Well, again, bullish structure and that demand zone. So if we take a look, we also grab liquidity under these lows. Like I explained, when we trade down lower, up higher, down lower, up higher, down lower, up higher, we create liquidity under these lows, because what is really happening? People are buying over here. So they put their stop loss underneath these lows, right? They're trading, for example, to this liquidity. Then they buy something like this, trading to the high again. Then something like this. So what then happens every single time? Stop losses are underneath these lows. So if we take those lows out, we take stop losses, which could give us a move back up higher. So that's the reason why after grabbing liquidity, we could see a move up higher. So let's now go to the daily and let's see if we grabbed some other liquidity over there. So as we can see, yes, we took this big liquidity over here, but we also took some internal liquidity, which is also nice to have. And this is again more fuel to fuel the next move up higher, to take again fuel at the highs, to then, for example, trade down lower. Okay, so we not only use liquidity to push price up higher or to look for a point that could push price up higher. It's the same as supply and demand. It's also seen as a point where we could trade towards. So I rather target liquidity than a supply zone, and the reason for this is that we could take liquidity and already react from those stop losses before hitting that supply zone. So I always want to have the safest take profit, which is in this case at the liquidity and not the supply. So now that we've take a look at the daily time frame, let's now take a look at the 4-hour time frame. So on the 4-hour, what do we see? Well, we took the exact same liquidity over here at this low. So yeah, there is some liquidity here, but I'm going to talk about why we didn't wait to grab that liquidity, and we already could have taken a long setup, which you see over here. Then it's kind of the same. So we took that liquidity and we want to trade exactly to that same liquidity as on the daily time frame. So it is the same. And now we also checked off liquidity because yes, we took liquidity to fuel the next move up higher. So the next thing now is, if we checked off liquidity, order flow. Okay, so order flow is really important, so we are going to take a look at that as well. If we see that it's good, then we can take the setup if we have the next checklist, strong highs and lows. So let's see. Okay, so we now did liquidity. Now let's take a look at order flow. And basically, what is order flow? It's a flow of orders, right? So what do we mean by this? Well, if we have a supply and demand zone, right? So if we have a sell before a buy, let's say, and we have a demand zone. I hope it's clear, right? When we trade in that demand, we of course expect a new push up higher. What does this create? A new demand zone. So when we trade back in towards that demand, we could then trade up higher. And what do? We create a new demand. So what is order flow? It's a chain of those supply and demand zones chained onto each other. So we're going to take a look if price has this in our example. If it has it, then it's super valid, because if we trade against order flow, there's a high likelihood of getting a stop loss hit. So definitely order flow is one of the most important things we need to take a look at, because without order flow you are probably going to hit stop loss, or at least that's what I backtested. So let's take a look in the chart. Okay, so looking here at the weekly time frame, what do we see? Well, again, we are bullish structure, so we want to trade up higher, right? Now, what are we looking for if we want to trade up higher? Bullish order flow. Do we have bullish order flow? Yeah, we do. Because what do we see? We see a demand zone push price up higher, creating a new demand zone, pushing price up higher, creating a new demand zone, pushing price up higher, creating a new demand zone, pushing price up higher, creating a new demand zone, pushing price up higher. Probably, or that's what we are expecting. So we have bullish order flow on the weekly, which is great. Going over to the daily now, well, what do we see? We have the exact same order flow here on the daily as well, because let's zoom out a bit. Once we were daily bullish, we then, again, like we explained before, tapped in towards those discount prices, and from there we could trade up higher. What then happened is we tapped those discount prices, and we also tapped this demand zone. From this demand zone, we pushed price up higher, and like I explained, we create a new demand. This again pushed price back up higher and created a new demand zone, and this demand zone again created a new demand zone because it pushed price back up higher, and this demand is now, or that's at least what we're expecting, going to push price back up higher in towards that supply and that liquidity. So yes, we also have bullish daily order flow. Looking at the 4 hour, well, what do we see? This is our demand. So we now only have one demand here. So do we have bullish order flow on the 4 hour? Not yet. So then we need to see if we get a push up higher, we know that we create new demand. So let's wait for that push up higher, and it also happened. So we pushed up higher, broke this high, so we created this new demand zone, and now we have two demand zones, right? So two demand zones. And what are two demand zones? A chain of orders, right? So multiple demand zones equals order flow. So now we have bullish order flow as well. So after we broke this high, we got bullish order flow, and from there we could take our long setup. So now we are going to go over strong highs and lows, our last thing in our checklist, and then we know if we can take the long setup 100% sure. Okay, for now everything is looking perfect, so let's see if we already have a strong high or low. Okay, so we now also checked the order flow. So structure checked, premium versus discount checked, supply and demand checked, liquidity checked, order flow checked. So now the trade is already valid, but now we have our entry model, and for our entry model we need strong highs and lows. So for our strong highs and lows, what do we want to see? Let me make it clear real quick. So for strong highs and lows, what do we need? Well, if we have a point of interest, so let's say we have a demand zone, right, where we expect price to trade and then up higher, yeah? So what do we want to see inside this demand? Well, we want to see early buyers get swiped. So because we're looking at a long, we're looking for early buyers to get swiped because we're looking to buy. But if we look at a sell, we look at early sellers to get taken out, okay? But for now, we have a demand zone, which is our point of interest, let's say. So we trade in towards that demand, and then we often see early buyers, so an early push up higher. Now we know that this low is not good. So this low is bad. So we never want to place our stop loss below that low. What are we then waiting on? It's a swipe of that low, because then we swipe stop losses underneath this low. We swiped early buyers, which were in this move, and now the real move into its upside will happen. So let's take a look inside the chart and let's see if we can find this. Okay, so on the weekly time frame, it is not needed to have our strong high and low because we are looking, like I said, for a strong high and low inside our entry model to see where we could place our stop loss underneath. So on the weekly is not that important. Going over to the daily, well, there is a strong low, but again, it's not really needed. So, but let me explain it on the daily as well, so you guys can see if we have what it actually is, right? So once we tapped in towards this demand, so this was our first step. We then saw early buyers, which we then swiped and traded down lower. Then again, we got another time early buyers. So a lot of people, they would say, well, we swiped early buyers, now we could trade up higher. Well, that's not the case. We're always looking at confirmation. What do we know is our confirmation? The fractal high, which was this at that point in time. So we wanted to see our confirmation, and then we know that this low was strong, then we could trade up higher. But that didn't happen. We just traded down lower. So we swiped the low once again. So then on the daily, you would say, well, of course, we would want to break this daily fractal high in order to trade our long setup, which is completely true. But I already looked at the fundamentals and I wanted to take it more aggressively. And I also saw that we took all of the internal liquidity on the daily. So for me, there was no point of swiping it once more because we already swiped it twice, and on the 4-hour what I will show you next, we already got our bullish order flow like we explained, right? So what happened over here, we had our early buyers like we explained on the daily. We then swiped them like this, and then we wanted to trade up higher. But this was still our supply in control because we at the moment had bearish order flow, and then we pushed down lower. So we couldn't take a trade over here. Then we pushed down lower and we swiped the low again. And if we look a little bit closer, we swiped the low once more time because what happened, this was our order flow. Now we had this supply, and now we swiped again the low, so we created this supply zone. Then we broke above that supply, so we got our bullish order flow, and that was our confirmation that this was our strong low after swiping all of those early buyers. So we now know that we have our strong low. So what could we now do? Place our stop loss underneath that low. So that's also what I did. And then where do I need to place my entry? Well, what I did is I just place it on top of this entry point, right? This high of this demand zone, because from this demand we could push price up higher. I also know a lot of people that had put their entry on top of this smaller demand because it's still an open demand zone, and as you can see, price often taps in those open demands to move back up higher. But I know that there was just enough upside room, so I just swung it all the way to the high because I don't want to miss the move by refining my entry to get more profits. Okay, so that's basically the trade, and then my take profit was at the liquidity for a little bit more than a 3 risk reward, but still it's fine because that's what I analyzed. So this is basically the trade. I hope you learn a lot, and yeah, see you guys next week in the next breakdown. Ciao.